Hello, my dear friends. Sorry, last week I couldn't able to make a video. So, two things I want to talk about on this week. So, one is about a very key concept of investment, which people are still not able to figure it out what it is, and there are a lot of questions are coming up. How to do SIP or what is SIP, and how do people are asking me like they simply come and say that shall I do SIP? Shall I start my SIP? Where to buy SIP? How to buy SIP? Right, these all questions, if you think right, it clearly shows that people doesn't have clarity about what is this SIP means. There are a lot of social medias and YouTube channels are there. They are also talking about SIP, but still this question always been raised by the audience, that what is SIP. See, again, I'll tell you and I'll explain you in this video about what is this SIP means and how can you do SIP in stocks. So now suddenly, like when I say SIP in stocks, some would have confused, like what is this SIP in stocks? Always I heard in mutual funds, right? Yes, that is the biggest problem we have. So this video I'll demystify all this kind of things and we'll discuss. And at end of this video, please don't miss this video. I'm also going to deep dive into a stock which will give some kind of clarity about how do I do SIP in that stock as well, and why you need to start SIP in a stock. All those things will be covered, but don't confuse what I'm going to detail it out. But this video is purely for the people who want to learn how to do SIP in stocks and what is the benefit for me to do that same thing, right? So that's the time. That is what this video is going to be. Stay tuned. This is Sundar, and you are watching Mindful Finance. Okay, let's break down today's topic. What is SIP? SIP is Systematic Investment Plan. And what is EMI? EMI is Equated Monthly Installment. SIP is a process, EMI also a process. EMI is a debt, SIP is investment. When I buy a loan of say 1 lakh and I'm going to say EMI of 10,000 means every month I'm going to pay 10,000 rupees to close my 1 lakh loan, which includes my interest rate, right? So this 10,000 also includes my interest. Similarly, SIP is a systematic investment plan. This is also a process where I'm going to invest 10,000 rupees every month. But the end amount, I won't know. In EMI, you will know the end amount because this is what the this is the amount you got as a loan, and this is the EMI, and this is the principal, this is the interest rate. All those things you will know in EMI. But in SIP, you just know only how much money I'm going to invest every month. The end amount is a dynamic because this SIP, whatever we are talking about, is an investment process which we are going to do, or which we will do in stock market. Right? Stock market is volatile in nature. The return, the interest may change based on the market volatility. 1 year you might be ending up in a 10% return. In 1 year you might be ending up with 18% return, right? We won't know. But EMI is a fixed but if you take a housing loan, it's a floating interest, right? So where your EMI may be same, but you won't know the end of the year how much you are going to end up in paying to close your loan, because anytime the rate may change. Similarly, in SIP also the similar case. When you are investing, the money is going to be the same, but end of the year you won't know how much you are going to get. So this is the high level comparison between EMI and SIP. Now get into the SIP now. Most of the people ask me, how do I do SIP? So the worst part is how do I purchase or buy a SIP? SIP is not a product. SIP you cannot get in Amazon or anywhere, right? Or even if you go and ask the bank person that I want to buy SIP, nobody is going to give. So SIP is a process. You check whatever type of investment you are going to do. you are going to systematically invest in a disciplined way, like weekly, monthly, daily, whatever it is. But equally, you are going to invest on that particular investment. If I'm going to buy a stock, I'm going to have a limit that, okay, every month I'm going to invest 10,000 rupees. Within the 10,000 rupees, I may buy a stock, but every month I'm going to invest only 10,000. Right? This is my limit and this is my budget. That is how I'm going to invest. This can be in mutual fund. The most of the time people know SIP in mutual fund, because mutual fund is something that is came up mainly with the concept of SIP. I think I spoke more about this SIP. Let's jump into the reality now. Now see how this SIP works, how I will get benefit from that. Let's get into that. I have already laid out some strategy over here. What I have done here is I have picked different stocks from different sectors so that my portfolio is diversified. I'm not going to concentrate my portfolio in only one sector. If you see, my budget per month is, I have set 10,000 rupees. The stocks I'm going to invest are State Bank of India, Infosys, Tata Steel, Sun Pharma, DLF, Hindustan. If you see, this is a banking sector, this is software technology sector, this is metal, this is a cyclic in nature, and Sun Pharma is a pharmaceutical company, DLF is a infra, again this is also cyclic, Hindustan Unilever is a FMCG, it's an all-time thing, right? So I have covered all the sectors. I'm going to invest 1,666 in each of the stock, but Hindustan Unilever I have added more, like 3,000. But this sum might be different, like 11,333 comes. But when I'm buying, sometimes you will not end up in buying with exactly 1,666. I'll show an example. This is my budget. Using this, I'm going to invest in all those stocks. January 2010, I have pulled the data, and it's a monthly installment, and every month I'm going to invest on the first date. And also what I have done is, entire month this data shows high and low, but I tried to invest whenever the market was high on that particular time, in a probability side of highly risk side, right? So investing in the highest price of that particular month. So in that way, if you see, so every month, first of the month, I'm investing. So if you see, this is the highest price of that month, which is 651.75. What I have done is, with 1,666 rupees, how many quantity I can buy? Approximately I can buy 2 quantity. So invested amount comes around 1,300 rupees. It is not 1,660. So that is a 300 rupees, right? Similarly, if you see from 2010, but that time this was 1,620, almost like the money which I want to invest. So that time I was able to buy 7 quantities. The reason is the stock price was 231 rupees. So since the stock price was less, I was able to buy more quantity for the same amount. The similar thing, if you check now the current scenario, the price is 642 rupees and I can only buy 2 quantities. The investment amount still same, right? Similarly, I have invested in Infosys, Tata Steel, Sun Pharma, DLF, HUL. If you check HUL, see, the initial time I was able to buy 11 quantities. Now if you see, I can afford only 1 quantity. So the price is 2,669 at this point of time, right? But my investment amount is 1,600. But in other area, I'm getting 300 rupees. And if I see Infosys at the current time, I cannot even buy. In the January 2024, the current price, I cannot even invest in Infosys. So from there, I get 1,666, right? So similarly, like the money which you get, if you are not able to invest, or the remaining balance amount, you can add it to the HUL. So that way, I invested, I have put a proper plan. So if you see, from 2010, how much I would have invested is 16,70,000. But if I assume that 10,000 per month, right, it would have been around 16,90,000. So 20,000 I have invested less only. That's okay. These are the invested amount. And if you see the current value of those stocks, so invested amount is 16,70,000 and the current value is 55,09,440. and the rate of return I have received in this investment is 15 percentage. I have received 15 percentage when I did this way. See, I didn't do any kind of a logic, nothing, right? I just simply blindly, without any logic, anything, I picked 5 stocks from the Nifty 50. That is a key point. Okay, all the stocks are comes under Nifty 50s are large cap. In that, I am able to get 15 percentage return. That's a very good return, I would say. If I would have invested instead of this, if I would have invested in Nifty index, just Nifty index, if I just keep on buying index, which is Nifty B's, current value is 46 lakh 41,000. Invested amount is 17 lakh 10,000, far higher than the what I did earlier, and the XIRR comes around 13 percentage. But in our case, we are getting 15 percentage XIRR and also received more than what in index. So we are able to beat index. People say we cannot beat index. That happens only in mutual fund, guys. I'm telling you, mutual fund. If you invest in a mutual fund, which are active funds, very difficult they beat index. Very rare fund managers can beat index. But when you do in a smart way, I can demonstrate you. I can still demonstrate you another method. You can beat more than what this method has recommending you. I'll tell you an example. Okay. So now SBI. So let's pull SBI chart now. So let's pull the SBI chart here. So I have the chart here. See, as per our plan, we would have started our investment during the time of January 2010, right? Which is almost here in this area we would have started. Just imagine from then, every month you are invest 10,000, 10,000, 10,000. It is keep on increasing, right? But when it is going down, so here also you will be investing. So till now you will not be in a negative. Okay, till now you will not be in a negative. When it goes below the starting point, which is this is where the point you started, and when it goes below, your investment will be in negative. If you see, this is the area you started, and now it went down than where you started. So now this is when December 2011, exactly 2 years from the start date of your investment, your portfolio, if you have only SBI means, will be in a negative, would have been in a negative, right? People would have panicked, would have exited at that point of time. Anything is possible. If you see, right, how much percentage it has fallen from there, if you see, it is almost 55% it has fallen at that point of time. So now you have to think, if you are very strong in your conviction about SBI Bank, what you would have done is, you would have changed your methodology here. What is the methodology? If I go back to our actual scenario here, so this is where the investment is, right? So this is a regular investment which we were doing. Now go to that November 2010, right? 11, this area, right? In this point of time, if you would have invested extra on that particular time, for example, instead of 8 stocks, instead of 1,600, if you invested extra 2,000 rupees, say for example, if I invested 2,000, which is divided by, at that point of the price is 189. So approximately 10 unit. So your investment would have, see there, so this is your previous return, and now because of this, let's see, minus previous one, you would have received 9,265 extra. Understood what I'm saying? So now your investment, the value become 16,79,000. Let's undo how much? 16,70,000. Now how much? See, that is the smart way of investment, right? So it's not, if you would have done this kind of a thing on every dip, I'll show the SBI chart again. If you would have done that part, how many times it fallen since then? See here. Again it came to the same level. Again it touched the same level. Again it touched the same level. So how many? So you would have seen this negative drop of your stock at every, see one. This is 2013, 2014, 2016. This is 2020. Every time, these are the area you would have been in a, really I would say, like everybody would have panicked. They would have felt, boss, I'm done. I cannot be in this area. I'm not belongs to stock market. Everybody would have left at this point of time. But assume, let's go here to March 2016. Let's go there. March 2016. right? So similarly on this, assuming like next 3 months you are doing the same thing. Now again let's see, it's from 9,000 your portfolio is now increased to 15,000. Then let's see what was the next fall. Like every fall, okay, let's track every fall. This is 2016, right? Then this is 2013, October 2013. Let's see what happened in the October 2013. So this is October 2013. Then what was the next fall? This is Feb 2016. Then 2016. This is 2020. Now let's see, 30,000 increase in your portfolio. Hope you understood what I was trying to say. Even if you would have done a normal SIP without even considering any of this kind of a method and straightforward, you would have received 15%. And in this place, you increased your investment, right? And your return will be, obviously, will be more only. So that is what I'm trying to say. SIP is a very powerful process. If you use the process properly, you could make money in very decent way without doing any extra effort. You can become easily financially independent. That's what my point is. So for this SIP kind of a mode, I'm just going to give one stock which you guys want to study and understand, and based on that you prefer whether it is a right time to start SIP on this company or not. I'll go through with this company, and this is not a stock recommendation or anything, but you have to tell me whether this stock is good to go for SIP or not. That you can comment in the video. So let's go into that. So we are going to discuss one company. So this company is currently exporting their product to say Bangladesh, China, Europe, Canada, USA. So these are the area this company is currently exporting their product. And if you see, their main product is shrimp or shrimp feed. If you see the capacity with which they have produced compared to the previous year and this year obviously it is lesser. Even though if it is like 4,97,550 metric ton, but if you compare to the last year, it is almost 1 lakh ton is less. And the processed shrimp sales are almost again the same thing, like it is 400 metric ton is lesser than the previous one. And if you see the market capitalization of this stock is 4,628 crores, small cap. And if you see the consolidated profit before tax, last year it was 36,669. This time 47,130. There's a very drastic change in the profit. And if you see profit after tax, that is also, you can see very good amount of change. That means something is growing there. The profit is going means there are two scenarios. One is, see, their production is less, but they're getting more money. That means what? They would have increased the price. The demand is actually lesser, but that is volume of demand is less, but their profit is increasing. That means they would have increased the price, and due to the inflation and a lot of other stuff, the price would have increased. If you see the data, like during the FY23, the turnover itself around 4,135 lakhs. The net profit increased to 23,284, which is compared to last year, last financial year, which is 19,925. It's a very good amount of increase. In the last 1 year, they invested, or that operating cost might be increased because the reason is they have invested more money to expand their manufacturing capacity, which is 1,75,000 metric ton. That means you should understand, right? A company is expanding their production. That means they're expecting there could be a change in the volume in the future. And also normally the manufacturing industries, how it happens is, it's very rare to use 60% of their capacity. If they are utilizing more than 65% or 60%, it's a very good manufacturing unit. And the next thing is, this company is exporting frozen shrimp to USA, China, Europe, and other countries. So that is again is going to give more revenue in the future. Right now, Europe and USA, everybody is facing inflation problem. So the consumer consumption is reduced at this point of time. Whenever the liquidity pumps into the market, liquidation increases in the market, people will start to spend more. right? So that is where this company is setting up the base so that the future they can be ready for the volume. The India shrimp market achieved a volume of 0.85 million tons in 2022 and is projected to grow at a CAGR of 9.6% during the forecast period of 23-28. So that means it's a very good opportunity for this company to increase their turnover and the volume. This is another good thing is in the global market alone, the shrimp market is expecting a 5% growth, CAGR growth. That's a very good number. I'm talking about the overall, the globe level, not just India, right? So India alone, we are expecting 9.6%. Globally, we are expecting 5%. But so their total capacity now is going to be around 7,75,000 metric ton production. These are the products they have. So what? And another thing is they are increasing their foothold in the frozen food sectors. So that is the power of this company. And these are the products they are currently manufacturing. Raw shrimp, cooked shrimp, value added shrimp. What is the stocks? This company name is Avanti Feeds. And if you see currently on the past record, if you see right, since it hit a all-time high around October 2017. And then it fell like anything and it is consolidating. If you see the consolidation pattern, it's a triangle pattern. Okay. And currently, if you see, it has given a breakout, a very good breakout here, and it is consolidating at this level. And by the way, this is a weekly calendar. If you see, it's consolidating over here. And if it goes like this, and we can expect this may go to 1160 level. So this is the stock I just wanted to present today. So do your homework. You also study this stock and understand what you feel about this stock. Kindly post your feedback in the comment section. So this is the stock I just wanted to present today and hope you got some clarity about what is SIP and in this stock whether you want to do SIP or you want to bulk investment. So please post your comments about this particular company and also what way you want to invest in this stock. Hope you like this video. If you like this video, give a thumbs up. Do subscribe to my channel and share it with your friends and family. Thank you. Bye-bye.